There we go. Okay. Now, yes, I'd like to say thank you. Thank you for your patience mainly, okay, because we've got a big delay here because of all the things that's going on with the GoToWebinar. I'm not really sure. We're not sure what really is going on, but we'll try. We'll try our best, okay? So we had to get the link sent out again. All right. So let's get to it. I would like to just start first with the GBP USD, okay? Let's look at that because quite a number of traders, they are wondering, including myself, sometimes look into whether or not that pattern that we see is really, doing what it's supposed to do, or whether we've got a bit of a delay, or it has actually failed totally or entirely. Now, I don't know myself, but what I can see is we've got some, this is the 1 hour chart in GBP USD, okay? And of course, we have got money supply that's going to come into the UK. All right. Now, this may not be the reason why it is just stuck here with the support, this area here. Okay. But the other thing that has actually happened is we have found a quiet higher low and higher highs that the market is making out for with the GBP USD. Okay. So I'll just show you what I mean. Okay. And before anything else, I'll just draw this one out. Oh, I've got questions already. Connected now, Tendai. That's good. All right, brilliant. So let's just get a move on, okay? And we're looking at the GBP USD once again, 1 hour chart. Now here, just before everything else, I'll just tell you the pattern that I'm still following, and I'm still looking at this Z-like pattern here, okay, all the way down here, okay? So I'm expecting it to go up a little bit similar to the length of this one here. So that's my A here, okay, and that might be right C and D. Now I'm not giving up as yet because there are no reasons to show me that this pattern has actually failed. So this pattern has not failed as of now, okay, because I see that we have got support here. There's some higher lows as well, okay, and higher highs. Market has quietly, I mean for the pound has quietly recovered its strength, but sort of under the radar kind of movement that it's doing, very slow, very steady, but it's, there is some increment in price. The way I look at it is that the interest rate decisions, to cut rates and all that by the BOE or the Bank of England is not enough. It won't be enough to pull it down directly. Okay, so when a bank or a central bank cuts rate, usually what happens is that because of the money supply coming in, so that would actually then when they cut rate, it should actually be going down. Sorry, the rate should be going down, pulling the pound down, but that doesn't seem like it's enough to improve to really pull down the pound. Okay, so this is what's going on. But what I see is that I still see this pattern going on quite nicely, because to make the C to D move, it usually needs to make an A and then a B and then a C and then a D. Okay, so it's already made this part here, it's the C part of the ABCD move, so it still has got some hope in an upward move if at all it breaks out, okay, of the resistance there. But let's look into it a little bit more. Let's look at what's going on in terms of Fibonacci as well, so you guys understand the levels that I'm looking at as well, and why I still have hopes that it still hasn't failed that pattern. Okay, so I'm just going to draw very quickly the pattern that I see. Okay, so that's how it looks like. That's the A to B, right? And that's the C to D. Now I'm using the 1 hour chart at the moment. So we've got A, C, D there. We'll just do the same way and do your A to B here, okay? And then once more we connect the B to C all the way down here, okay? So I'm still expecting prices to appreciate in value and reach the 138 area, but of course, I'm not going to aim that straight away. I would like to trade in stages. Now if I zoom in a little bit, zoom in this way, and you can see that you've got price concentration all this way here. This is the lower part of the sideways channel, that's the upper part of the sideways channel. So what we do is let's just how do you call that, plot a support resistant area. So I like plotting using this area here. The reason because it's because of the candle type. Sometimes I use certain peak to do the support resistant area only because it's marked by a reversal here, and I like to use the peak that has a reversal candle. Okay, when you look at a candle with a higher wick, that wick is called a rejection needle or a rejection wick. Okay, it's rejecting the price to go up and then it reverse coming down, and the same goes here. Okay, here it's got a rejection needle because the needle or the wick bigger than the body. So I could either use that one there, or I could use this candle here as well. Okay, and we can still do that. No harm doing using this peak or that other peak, as long as we are aware of the kind of resistance that is waiting for us at the top there. Okay, so we've got that one there. Okay, we'll use this one here. Now we'll do the same for the bottom part. Okay, now we've got the bottom part here. As you can see, I like using concentration of price. Okay, got concentration of price all going sideways here. So I'll take that area there at the bottom. It's the same way I did earlier on. I look for like this one here. I prefer using this one because we've got a sort of reversal there. I can also use that one at the top here, but let's say I prefer, okay, let's say we use that family of candles here. Okay, we can do that as well. That you could see that there's a form of reversal there. You've got a body that's smaller. That's just using the theory of candlesticks. Okay, and here you go. So you've got a kind of narrow sort of support resistance here. This one here is bigger. Okay, but it's okay for now. We get just to make sure that it is a strong area. You could see that there are various long candle that has passed through. So once we've done that, you do the zooming out, and we go onto the 4-hour chart just to make it clearer on the 4-hour chart. See the pattern as well as the resistance. Okay, so this is what's going on now. Okay, so we have laid out the support resistance zone. We have laid out a target as well here. Now that target, I got it from the distance between A to B equals to C to D. We call it quadrilateral. That means AB's length equals CD length. That's one way of getting the target for the D on the Z-like pattern. Okay, the other way is to pull your B, this is B, to C and look for the 50%. So the 50% is there. Okay, so this gives us two options where your TP could be, and not only your TP, the TP would equal the price reversal zone as well. So just looking at it at first glance on the 4-hour chart for the GBP USD, we're looking at challenges at the very top for it to pass through, but it has made some sort of higher lows, as I've mentioned, not very significant strong ones, but there's some, to some degree it has recovered in price trying, but now it is still going through, it's still how do you call that, inner range, and it's trading sideways or a 3 o'clock angle. Okay, a 3 o'clock trend. Now the thing is that the longer that range is going on and on and on, the bigger the breakout could be. Now whether the breakout would be on the upper side or the lower side, we don't actually really know yet. Okay, it's very difficult, but there are theories out there that says that if you've got more straight lined, how do you call that, concentration here, then you could make out a sort of triangle or an ascending or descending triangle, and the straight part, let's say for example, I'll just give you a bit of what experts are saying. Apparently you've got straight line like that, but that one there is a lower high, and then you make a kind of triangle, but this is a straighter line. So wherever the straighter line is, then it would break out to that direction. Okay, this is what it says. Now, for me as a patterns trader, I do still see a downward move, but not just yet, mainly because of this area here, C to D. If I'm actually trading the Z pattern, I am looking at the potential of prices going upwards to this area here and then come back down. But this for me is also a sort of A, B, C, D pattern. What that means is that to trade the C to D going upwards, I need an A, B, C, D, and this does look to me like a potential A, B, C, D. I'll just use a straight line. Now, change that color there to gray. Okay, just to give you a, just to show a bit of a differentiation there. Okay, roughly. That's a bit more like blue, but it's okay as long as it's different from the yellow. So what I'm looking at is an A to B there, and then a C to D upwards. Okay, could be here, anywhere that's lower, could be there as well. Okay, and it's quite close here. All right. So if I am using this A, B, C, D, for example, okay, and you could see it clearer like this. Let's say this is a sort of ABCD. I'm expecting for it to break out. Then I would like to know the approximate entry point. So I cross it, convert it into a geometric pattern, and that's again marking an area that is quite close to where it could ideally or should ideally break out from. You see, so but this is the reversal zone and the ideal take profit area as well, but only once it has broken out above the 3300 area. So 1.3310 would be an ideal area to consider that the upward movement is in momentum, or it's trying to, and the bulls are trying to take over. But you've also got the 200 moving average here, you've got the some resistance here, and that mirrors that resistance there as well. So you can do another zone through here just to give you another possible risk area, because you might be going into a buy position thinking that it has actually broken out, but then very close to where it has broken out from would be another resistance area here, and coincidentally it's very close to the 200 moving average as well. So there are some challenges for the prices to really go up and burst through only after it has burst through that area there. So we're talking about, you know, based on the 4-hour chart, some more pips, at least 200 odd pips for it to actually go through this second area. But you've got some space once it has actually broken up. So once it's broken out from 1.3310 or 1.3330, then you could you know, look into buying. But then what I would then tell you to do, or suggest you do, is to quickly go on to short-term or like the 5 minutes or the 15 or the 30 minutes, just to look into how you could compare and contrast short-term trades in stages, you know, perhaps from 20 to 40 pips per time, you know, just to take that in stages rather than putting in all your eggs in one basket and thinking that it will go that one direction. Because at this moment of time, as I've mentioned many times before, we've got too many geopolitical reasons to be totally sure about, and there's a lot of control and manipulation in the market by the bigger boys, by all sort of other factors that we cannot see. Okay, so this is what has actually happened. So that is why it's just so difficult for GBP USD, as we know the trend, as we know that you know, it's more likely for pound to just fall and keep falling now, and we are finding more and more reasons to not make it fall so much. And why? So this is a very unclear, or how do you call that, very gray area. So we want to always confirm between the chart and the patterns or any other strategy to confirm the direction as well. Okay, now when we go on to 5 minutes, let's say, and we could see that the play of it at the moment, even on the 5 minutes, is quite uncertain. Okay, you see the price, look at the price, and it's at 1.3197, so it would need to go under 3180, like 3170, to give us more space. But here you could see that lots of rejection there. As you can see, there's a rejection candle there. Okay, so it has rejected already, and it rejected the price for the pound to go further up. Okay, this is on the 5 minute chart, and hence we could see that there's a bit more power from sellers trying to push it down and push it through the 50 moving average, as you can see. And you know, price action wise as well is another challenge there. Okay, so we need prices to go under the 50 and under the 70, sorry, under the 80 site number, 3180 and below, to give us a bit more assurance that it is indeed going towards greater, bigger bearishness. Okay, now if we for example, for those who wants to scalp, you know, I'm backtesting some very short-term scalping using chart pattern at the moment. Now, what I do is that I like to look at how do you call that, reversal signals. Now, that is a bit of a reversal signal through a candlestick, meaning you have got a larger rejection of the candle. The candle's wick or needle is bigger than the body. As you can see, that's a very nice clear rejection sort of candle as well. And the other thing is you want to look at more candles giving you signs of bigger wick, bigger needle, bigger than the body. That gives you rejection. Okay, rejection to the upside. Okay, so the longer the candle, bigger and longer than its body, is showing you more rejection to the upside if this is all at the very top. So as you can see, prices is trying, and it has actually crossed the 50 minutes, sorry, the 50 moving average or 50 exponential moving average. So what I will then do, I'll treat this as an ABCD. Okay, so I'll pull this one down here, and I look at that to be 61.8, but I can always, you know, choose it right at the very top here, but I prefer to choose areas that would make my C land at a 61.8. so hence the reason I would choose this area here, and it's quite a good area to choose because it's just there, you know, concentrated at the 50, 100, 200 moving average as well. And then when I pull the A to B, I find that to be the how do you call that, the C area to be there, just stuck there with many candles, rejection candle, and we have got a reversal candle at play as well. So what I will then do, I'll just mark that here an ABCD first. Okay, this is to trade very short term, to look into whether or not this pattern could actually work for you as well for scalping. Okay, and I've tested that a couple of times for a few months already, and I just have found it to be, you know, working quite well, as good as the other time frame that I'm using. Even 1 minute, it would be quite good in the 1 minute. I've tested that even last night, and I've sent a couple of screenshots for you guys for the before and after. So here, once I've converted the ABCD into a geometric type pattern and find the center point, the center point gives me the price of 3188, and that's just too close to the 80 site number. And as you can see, you know, you've got a bit of a support, but it's not only about support, it's about how prices are respecting that center point with a rejection. Okay, it goes down and is making a correction, but that correction is not telling us a change of trend. It might be only a correction. We don't know that just yet. Okay, so what I would say is to trade under the 3188, so under 3180 even better, and then to aim prices at here. This is for your short-term sell. Okay, so you would actually take profit at 3137. It's okay because it's above the 20 site number, so you're looking at all of it going downwards, okay, all the way. So this is your very short term, and we can come back and check that later on the GBP USD and see whether or not this is something. It's looking like it's got a lot of power to go under. It's gone under all the 3 moving averages on the 5 minutes chart, but again, this is sort of quantified or confirmed by larger pattern. We still have some room. If it does go down, it's still going down in within the range. Okay, it's not a change of trend. Why? Because as you can see, no matter how much it moves, it's still got a lot of room to move in within the range, and it hasn't really broken out. So when it hasn't really broken out or have not broken out, that means it's not created a trend as yet. Okay, so what we're doing with GBP USD at the moment is trading in the range. This is what we're doing. But some of you may not realize, perhaps you guys think that it is a sort of new trend, whether you're selling and it's downtrend or buying is buy and it's uptrend. As for me, no, we all have been trading in a range, and that range is marked by this area here. So that area for all these lines here, we're still trading in within all these lines, and this line here for me makes out the range that the GBP USD is trading as of now. Okay, so if we go back to 5 minutes chart, you could see that again we've got a bit of a rejection there on the downside, but it's coming upwards. But this may not be per se a sort of rejection candle. We just don't know just yet, because we would like prices to come under that. It did try to pierce through, but now candle on 5 minute chart is giving us some strength to the upside. But again, we've got all these three lines as well, and the resistance area to keep it as a challenge or an obstacle for prices to move upwards. But we did have a sort of reversal candle here already, marking from the very beginning a downside move. So if we look into the area here, we've got 3137, that's 3188. So even if it is 3170 and I enter under the 80 psych number and I take profit here, I've got close to 40 pips still to take, and that's your shortest term. Okay, so we'll just wait and look at that. All right, any requests from you guys? Anything that you guys would like to look at in terms of the pairs? I'll just go through some of it that I could see, the majors especially. There's a lot of concentration on AUD/JPY, guys. Okay, just to let you guys know, major banks are shorting or selling the AUD/JPY. There are lots of justification or factors that would drive the AUD lower, much lower than the Japanese yen. The Japanese yen is going through lots of reasons that would justify its action on putting money in. That means what do you call that, may not be helicopter money per se or as big as they would like it to be, but it's still pump of money in. But the thing is that it's going to pump money in, and it's going to increase the rates and push up the JPY only because the amount of money they're supposed to pump in is smaller than the money that they originally thought. The original money was in the trillions, and it was really big for the yen to actually have the money supply being pumped into Japan. Okay, so with Australia, we're talking about cutting rates, so there's a lot of reasons to believe that Australia's rates going, downwards, and then the upward for the yen. Okay, so this has been signaled by quite a number of banks on shorting AUD/JPY. Okay, so we will take a look at that as well, AUD/JPY, and look at whether we've got any pattern. But here we want to look into some majors. We have got quite a number of experts, including banks, are looking into buying. I've sent something through Telegram today, and from Citibank and Deutsche Bank especially, they're looking into the upside or the bullishness, potential bullishness of the Euro USD. Okay, as you can see, you've got a lot of flagpole pattern for me, and you've got the pole here, you've got another flag coming downwards. We're looking at a 1 hour chart for the Euro USD, for example. Here itself, it's not too bad a flagpole pattern actually. All you need to do is be careful with how you do the channel. Channel is best for us not to concentrate on just the wick. Okay, it's good to touch the body a little bit to make sure that you are having the channel drawn the best possible way. Okay, and I mean, there's nothing as perfectly drawn channel or support resistant, because all we want is the after effect of it to be following what we've drawn closest possible. Okay, so we have got all these channel coming through, so we are looking at a potential to break out and go upwards. If we go on to the 5 minutes, for example, let's see what's going on there. As you can see, you know, we've drawn that channel. It's still in within that channel. We've got some lower lows, let's say, but then it's sort of a wedge-like pattern. I think it's quite a pattern there, but we have seen, I mean, compared to this one here and here, we've got a higher low, so this could easily be like a W-like pattern for me too. But if I take that and treat this as an AB CD type pattern, then I could see, or maybe here, I could see that it's quite close to there, 61.8 sort of thing. Okay, I'll take this one here. I'll take this one here instead, because the last candle now is still moving. So let's say here, now if I mark that AB equals CD, I still find that it's quite close to the breakout point of that channel. Okay, and this could be a W-like pattern for me too. Okay, so the Euro USD, you know, it's just looking like it's got some potential. Based on the 5 minutes chart, we've got that going through as a potential trading opportunity to the upside before it corrects itself coming down again, because this is a W-like pattern. Okay, but then if we go into the 1 hour chart and we minimize that, then as you can see, it's a very nice clear potential to the upside as well. But when does it actually really break? We don't actually know that as yet. We want to use Fibonacci, pull this one above. But there's another thing here. Let's just here there is a potential Z-like pattern for me, as what I can see just now. I've just spotted it now actually, and this one here could end up being something like this. Okay, and I pull that one down, so a little more room to the downside here before. This is a bullish like Z pattern, so I can pull that one all the way up here. Okay, and then the A to B part right there. Okay, all right, so the move downwards, usually it's about 50+% between 50% of B to C. So I mean the C to D would be 50%. So we've got some space there, which is between the two green lines there. So I'll just get rid of this one here. So if at all it's following this sort of pole flag pattern for Euro USD, I see a little bit of correction to go down to this area here between 1145, which is very close to the cycle number 50, and 1132. Okay, so this area here, and it's quite reasonable to believe that, because we have got all this resistance, very significant resistance here. Okay, and let's see. Yeah, it's quite nice, this one. If I, you know, just move that one up. Let's see what we, okay. Let's use a bit of Fibonacci and pull this A to B and look at where they see, and ended at the 224, not too bad. Yeah, if at all it's coming down to this area, it still is going to be a nice flagpole pattern, but the Z pattern here usually looks into it coming around here before it pushes up, and usually pushes up minimum 50% of that C to D, okay, in Fibonacci. So yes, we're looking at this. Not really much sign in any reversal. On the downside, we do have some dominance of bearish candles as well, so we just have to wait. And looking at the price itself, you know, I would like to see more momentum that would pull price under the 50. It is at 1.1165 at the moment, so it would need to go down to the 50 and then under the 50, and if it does, and tries to go up, then you could actually enter sort of a buy once it reaches this area here, which would find the support very close to the 50 exponential moving average as well. Okay, so this is what I could see at the moment in terms of pattern 2. Okay, as a very simple Z-like pattern. Now I have just to share with you guys, I have seen that the Z-like pattern could work quite well even in the 1 minute and 5 minutes chart, and I've experimented, as I've mentioned, with various pairs including gold, silver, oil as well, and yeah, it seemed to be working quite well. This Z-like pattern is just to decide whether it's a Z, how do you call that, bullish or bearish type Z pattern. Okay, this one here, because bullish is if the longer part of the Z, okay, this is the Z, the longer part is to the upside, that means it's called a bullish pattern, whereby once it has landed, the D landed at the 50% Fibonacci area, then it would make a bit of a rise upwards. Okay, so this is for Euro USD, guys. And then what are your questions? Have you guys got any questions, any preferences in terms of pair? If not, I'll just continue and proceed to various majors, and then we'll look into some of the pairs that the banks are looking at, and we'll try to look for patterns. Okay, so this is going on. The potential, Euro USD potential to the upside, you go into the 4-hour chart, the daily, and they are actually showing you, I mean, not so much the daily part, but up to the 4-hour is still strength to the upside. Okay, but you want to trade on a neutral time frame, that's the 1-hour chart, and based on that 1-hour chart, you could see that there's potential following the Z-like pattern to this area here, this zone marked by the 2 horizontal green lines. Okay, we'll proceed to the USD JPY, give you a bit of an idea again. Here, as I have laid out many times, we have got, let's just go into the daily chart. As you can see, you know, a big move downwards, but then you've got this giant support here, okay, and still it's looking to me like there are potential to the upside. It may be trying at the moment to make a bit of a channel up, but it's still challenged by JPY's strength and potential to the upside. Okay, it's more on their fiscal policy and everything else that's going on at the moment. Okay, now if we go on to the 1-hour chart, you can see from 1-hour, 4-hour, as well as the daily chart. Let's go on to the weekly and the monthly as well. I mean, there's just too much hint to the downside for USD versus JPY, so it's signaling more strength for the yen and more chances of shorting or selling the USD. Okay, this is versus the JPY. All right. Okay, let's see. I mean, here we've got a full a flagpole pattern, a bit of a flag area, and then you could see it coming downwards. That distance here is very similar to that distance of that pole area as well. Okay, let's see. Let's move to this one here. So what is it doing now? It's sort of on the 1-hour chart, prices for the dollar versus the yen, it's looking like you've got more bearish power. Okay, as you can see, it has crossed over. It's even trading under the significant support area here, so it has somehow found made this support area into resistance here and traded lower. Okay, so we might find a potential ABCD here, for example, more room to the downside. Here, as it's going down, you've got a bit of a rejection going on here, but the needle is just not showing that it is not going down more. It's just, you know, it's not really a strong or any reversal type candle telling you that nope, it's going to reverse and it's going to go up. I don't see that. I'm only looking at the chances of more downward move due to the lower highs and lower lows as well. Okay, and this is what's going on. So it'll find resistance here again, I would guess, and then back down again for the dollar versus the yen. So the potential for the dollar versus the yen is more to the downside as opposed to the upside. Okay. All right. So, but it's not that clear for me because I don't really see a very clear sort of pattern, but there are longer term ones that may be a bit clearer. Looking at this one here, you could pull that to be your A, okay, your B here, C, and then you could project your D, okay, do the AB equals CD, and you could see perhaps more potential to the downside based on the daily chart as well, okay. And if I pull from this area here, could see that the C is really at the 61.8%, so that gives you a bit of a potential there as well. Okay, but you want to convert that into a geometric pattern to give you the center point, give you a bit of an idea where ideally you could enter for a short. So use the center axis point as a ideal selling or buying point once you've converted an ABCD pattern into a geometric type pattern. Okay, so this is your ABCD. Perhaps I'll just draw this one very quickly for you guys. Okay, this is based on the daily chart though. I'll use this one here, okay, because this is where the reversal took place. Okay, all the way downwards here. Okay, tidy that up a little bit. And there you go, right? So you've got your A, B, C, D there. Now, this is your AB equals CD, or your quadrilateral, we call it. And when I take that up, that's my B to C. Now, this is just a common ABCD chart pattern type. Now, when you want to convert it to a geometric pattern, which you do because you want to find the center axis point that could also mark a significant support resistance, what you do is you combine your A, okay, right to your D here, and you find a vertex, we call it, okay, and that vertex or center point is what would mark a very significant level, whether it be support or resistance. As you can see, lots of support area there, okay. You may be able to pull it to the past and look at how prices may have concentrated right on the dot in that area, and there you got a very strong resistance there as well, some support, some resistance, but they are all significant area. Okay, so that's a good sign that that vertex or center point is functioning quite well. Okay, now I see more power to the downside due to this very long candle that has actually gone through that vertex center area, giving us a lot of signal to the downside. So on the 1 hour chart itself, you could see the daily chart here on the longer term, you could see some potential, some selling potential that could be quite wise to take up. I mean, especially if it's under there, you know, under the vertex area, and you've got strength of the candle. What you would need to do then is to adjust the price that you see now and trade under the psychological number and aim it here. So you could aim it at 95.90 if you want, only because if it is above the 80 psych number would be a little bit better. Okay, so that's your USD versus the JPY. Now, let's go a little bit to gold. I mean, gold is, how does it look like? I mean, we've got depreciation signal for the US dollar. Okay, so that would then give some ideal scenario to the upside for gold. Okay, now let's see. If I go onto the 5 minutes. Ooh. Okay, there you go. I could see that do we have any reversal type candle? It tried rejecting there to the upside. It is not too bad, but the longer the rejection is marked by the length of the candle. The length, not the length of the body of the candle, the length of the wick or the needle part. The longer the needle is pointing upwards, let's say of a bullish candle, that means that the longer the wick, the bigger the rejection is for that. So as you can see, hence the reason we are looking at a live market now based on the 5-minute chart, and we are looking at lots of prices depreciating for gold. I mean, we're looking at the price being rejected at the top, and we're seeing it on the 5-minute chart to go to test the moving averages, and it has done so, and it's on the way down, trading under the 3. So under the 3 exponential moving average. Okay. Once we've done that, so we can see that on the short term, lots of power to the downside. This may create another pole flag pattern, so this is maybe why it's creating a sort of downward move, so that that downward channel could then show for this pole flag pattern for XAU or the gold. Okay, on the 1 hour chart. If I go into the daily chart, long-term chart, and I still see lots of potential here. Let's see, perhaps a sort of Z pattern, but you know, that curve is not really giving me a very clear picture whether it's a nice Z pattern, but it hits on the 224 there. If I take that one here, if it does come downwards, I'm looking at still a potential fall of the goal, okay, at this level here, but it's not a change of trend, it's simply a correction that would then look into it bouncing even more. Okay, so how much fall? It's 1310 and 1231 is quite significant fall expected there. So here the thing about it is that the pattern could still fail if the strength of the trend is really strong, and it does look like it found support above the 3 moving averages as well, you see. So this is still signaling upward sort of move, and this is signaled by the number of bullish candle and the number of existing or current bullish candles that is, you know, looking at prices more favoring the upside more than the downside. Okay, let's see. 1 hour chart again. All right, we are looking at a bit of a correction here before moving upwards. So how far down, we don't actually know that yet. It might just test a 50 area and not dwell too much or spend too much time in going through or challenging the other 2 moving average, in my opinion. Okay, so you've got upward or bullishness for the gold versus the dollar. All right, so let's see. That's for gold. What's going on with oil? Oil, we have seen depreciation. There's a couple of there's more production at the moment. Lots of nation, whether it's in Iraq, Iran, Saudi countries, or even in Nigeria, they are actually pumping up the production. So that is still giving the authorities as well as the economists chances to believe in a possible supply glut or oversupply more than or higher than demand at the moment. Okay, so this is what's going on, and hence the reason you're looking at prices falling for the oil. But the other thing to watch out for is not to get overexcited in selling oil at the moment. You need to trade in stages. Look to your left, look at potential support area. The reason being, in the oil futures or oil indices or indexes, we are looking at potential chances of investors pulling down the price as much before they actually buy, because the expiry date for these futures is coming soon, and that's at the end of this month, end of August. So this end of August expiry for oil, usually they would like to buy it cheap. Okay, they would like to buy it cheap and sell it high. So this is the chance for it to go down. I mean, we've still got time until the end of the month, so my guess is this could be what is playing in the market. I mean, forget about all the things that the media is saying, but we have got banks reporting all kind of inside works, because at the end of the day, the investors would benefit themselves. Okay, so they would do trading, insiders trading that would benefit them, trading that would benefit their partners and their shareholders mainly. So yeah, there are chances there. Now, what I would like to keep you guys aware is to look at points and levels to your left. We're looking at the daily chart, but look to your left. Look at how close it is to a potential buy sort of zone. That is at this bullish area here where prices have actually gone up and gone up significantly. Okay, so that is at the 39.89 area. Yes, prices are falling under the 40. Now, I mean, how nice would it be for investors to be able to have prices to, you know, start buying and increase the price when it's really cheap. Okay, it is down now, but it's got a very nice time frame for them to start buying soon. How soon, we don't know, until it reaches that area of 39.89 area, or 39 itself, make it a round number, and then start buying and make it a nice rally right to the 50s again. Okay, so that they can actually then make that $20 spread differences there. Okay, so that's just my guess there, but that zone is quite a interesting zone for us to take a look at. Okay, you go onto the 5 minutes chart, let's say, or the 15, let's say the 15 minutes chart. We have got a bit of a correction here, upwards move, maybe a bit of an ABCD potential there. Go into the 5 minutes. As you can see the rejection candle there. There's still room to the downside. Okay, there are some volume in terms of trend strength to the downside, because this ADX is showing the blue line above the 25, so that shows the current trend, which is the downside, to be quite strong. Okay, so here we have got majority of candles to the downside, and I like pulling this area here to about here and look at where that needle has pointed. It's pointed quite close to the 61.8, and it's leaded at the 50, so we have room to the downside. Okay, and that room points out to that 40.50 area. Okay, it's quite a nice price as well for oil traders. Okay, good. So that's what's going on with oil, guys. Let me just remove this one here. Okay, and what else should we look at? Well, let's look into AUD USD first before we go on to the AUD JPY. We have signs of that W pattern, you know, sort of reversing as well. I've got questions coming through. That's very good. Just give me a second. I'll come back to you guys. We also have, you know, that W expectation, but it's sort of reversed earlier, but there's no reason to believe that, you know, building up momentum to reach at that area before it falls further. Okay, let's see. We have got support, you know, with this rejection sort of candle as well, long wick rejecting the downfall, and it rejected on the dot of one of the 3 moving averages there. Okay, giving you a rise in price. So in my belief, there's still room to go upward. Okay, this is based on the daily chart, but to have these area here, we can always draw a zone based on this area here. Okay, and the longest wick there. So again, this is an area of reversal. Okay, let's get to the question. GBP JPY, sure, we'll look into that. Tendai, not a problem. Yeah, we'll go into it. Then as promised, let's go on to the AUD JPY, but before that, let's just get a bit more idea on what's going on with the AUD USD. Okay, it looks like there's lots of support kicking in, support here as well, and it looks like a cup-like pattern here, forming a kind of handle here, and then there's just more room to the upside, but this is very close to the mouth area here. Okay, this mouth area of this cup, so maybe a potential here. Okay, so that's your sideway, and then it's creating this sort of cup-like pattern, and that sideways is equal to this area here, so that's your mouth pattern. If at all it's on the way down, it might actually go towards this area here, which is half of the distance of the cup from the very top to the bottom, and usually this downwards like channel will go about 50% length to make you the nice handle, and then it'll go up. Okay, try to break out the mouth of the candle, come back down a little bit, and then all on the way up again. So yeah, some corrective move at the moment, but not entirely negative. Just from patterns perspective. Okay, let's do the AUD JPY. GBP JPY earlier on. Okay. This is a nice comment from Zifo. Is Gartley pattern and W pattern looks the same? You're viewing now on AUD USD. Okay. Very good question. Now, for me, I just like to not have, because if I tell you about Gartley, then I have to differentiate Gartley with all other type of patterns like the crab and the deep crab and the butterfly and all the other ones. Okay, if I just say W and M, it would then encapsulate all these patterns into one, but pay more attention to the Fibonacci ratios that you get from the C point especially. Okay, you could see it as a Gartley. I see it still as an M, and I try to convert these patterns, whether an M, W, or Gartley or butterfly, into a geometric pattern, so that I would only see it as an M, but I prefer the type of M or W to be the type that is closest to the Gartley type pattern. Okay, so here perhaps you're looking at a potential W like Gartley here, correct? I think that's what you're looking at the moment, and that's based on the W pattern here. Okay, so you're looking at correction. Now I just have my own sort of rule with the ABCD side of things. Okay, so like here I would then ignore, I would look at this A here, B, let's say, or B up here, let's say, okay, and then all the way down at the C, let's see, C, okay, around here. So let's say the A, B, C. Now, this is where I wouldn't use this area here at all, because your A, B, right? Your C should actually be decided by the Fibonacci. So let's say you try pulling your A first here, okay? Now, let's say you're pulling your A from here and you're pulling to the highest point. You can actually see there, let's say here, I've got an 88.6 concentrated area here. If I pull it from A to B and I make this my B, okay, I would then need to follow the flow of all this and take that as my C, correct? Okay, so I'm not taking that as my C. Why? Because this is all the way up and it's made out of a bullish candle, and the C point will be lower than my A, and it's not supposed to be that way. Okay, so you would need to make sure that you're drawing your ABCD first. Whether it's an M, W, or any sort of harmonic or non-harmonic type patterns, it's probably best for you to start with the ABCD and make sure that your ABCD has been correctly drawn, and make sure you are in order for you to get the C point correctly. Okay, so if I have this as my A and my B, okay, I can always do this as well, body to body. Okay, so the body to body, and I look at closest body area, and that touches again 88.6, so I'll continue and just use the wick again. It shouldn't matter so much whether it's a wick or the body, but if you use the body, it goes to the body. Okay, you pull A to B, and the body of A has to be pulled to the body of B. Okay, so let's say I ignore this one now, and I ignore this candle totally with this long wick. I take this here as my C. Okay, this bearish candle that you can see, and I can see now that my C is closest to the 88.6. All right, So then what I do, let me just remove all that. Okay, so I'll draw that out now from wick to wick. So that's my A to B. Okay, and I'll take that quadrilateral and use that CD, right? Okay, so that would be ideally my area of D. Okay, and I've just got a little different way in doing my ABCD as well, so but it's not really important. What's important is your C. Okay, so the C has landed at the at the 88.6, so then I would pull my B to C and look into my 113 or 1.13 area. So as you can see, the 113 is on the dot of that, so I don't need to draw another line as my TP area or my D point, okay, or potential D point. So then I've got my ABCD there, right? So I would be trading from C to D, so I need to then take my A to D to find the center point and use that center point to trade upwards. Now here, while I'm having the ABCD drawn out, I can then look back and look at whether or not I've got a fall of price. And if I do have the fall of price, then I would pull the Fibonacci from the highest point first, okay, to make that X to A area, okay. But I would like to look at whether or not my B point, okay, this will be my B, right, because my X would be there, and then A, and then my B. My B point needs to touch minimum of 38.2. If it doesn't touch and hasn't gone up to 38.2 and only touch 23.6 or hanging between, then I wouldn't actually trade this as my W pattern. I would only trade this as a W pattern if I could pull my X to A and have my B at 38.2 minimum. Okay, so now I could see that it has concentrated there. Then I'll take that away, okay, and then I'll draw my X to A, right? So now I've got my X to A. Now I'll be trading only C to D and then D to E, okay? But at this moment of time, I see this a little short here, which is good. The D is shorter than the X. That is actually quite good. What I then do is I try, because I'm not drawing a second line, because the AB equals CD is actually similar to pulling the B to C and find the 113 as well, okay? But there's another way of finding more lines as your potential reversal zone or your D point. You pull your X to A as well, okay? And you look for the 61.8, all right? Okay, and your 78.6. These are my favorite ratio that I usually use, okay? 78.6, okay? There we go. All right. Okay, so I've got 61.8, 78.6, and I've got that area there earlier on with, no, let's get rid of that red line there. And I've also got the AB equals CD area here, okay? But apart from that, I'll also pull my X to C as well and look for, again, 61.8, okay, and 78.6. Okay, these are all reversal areas. Okay, now when I take that out, I find that I've got that zone there, but then again I've got this area here. Okay, but this was an area that I could take profit earlier conservatively. Okay, but then price went up and starting to reverse in within this zone area. You can easily draw a support resistance zone as well, because it's a very nice support resistance zone if you can draw one, because you've got a lot of concentration point. Okay, let's see. So you see you've got all the concentration point there, and it's all in within this area. Okay, so what I can do then is I can just pick one of these here. Let's say the body of that there. Okay, and then the highest wick as well in that family, which is this one here. Okay, and as you can see, it's It's looking not too bad with so many lines and so many what do you call that, potential, okay, but wouldn't actually care for these two so much because it's quite far away, okay. So that became my reversal zone, okay, and that was my reversal zone, but I would have taken my take profit either this one here and trade further more, but then take my profit second round under 7587 or 7580 and below. Okay, so that's how I would actually trade that C to D. Now, I know now that my C to D has extended all the way up here. Okay, so I want to trade my D to E. I pull my C to D. Okay, and I can aim my E to be coming at least 50 or 61.8, but 50 would be good enough for me to trade the D to E. Okay, so that's where I'll be aiming at, and it's coincidentally at this area where it's quite significant support, air resistance and all that, so it's probably best to adjust, and you can see that it's 75.52, so I would take profit. I would actually trade under that 75, it's still 85, it's not much pip there though, but you can always 75.87, 75.60. Perhaps you want to take that earlier inside. But you can always trade a bigger W pattern or a bigger pattern based on bigger time frame or longer time frame. Okay, so that's how I would be trading. So I will be trading my C to D on the upside, and then once it goes into that area, I will trade a D to E. But it depends on how happy, satisfied I was with my C to D trade. I might just leave that and not trade the D to E because the C to D probability it may be higher. Now the reason for all this mess as well, it's due to the C point. The C point here for the ABCD, as we could see, it was at 88.6. It was not at 61.8 or 78.6. So usually with too many candles, wicks going up and then wicks coming down, and it's a lot of mess here, for example, then you would get a bit of a messy type, what do you call that, messy type pattern as well. Okay, so this is important for us to understand. Let me just sign out there for Skype. So this is how I would trade the AUD USD based on the pattern, but I would always start with the ABCD, okay, and you will see that you would get less, you would get less concentration of lines, okay. You would get lines that are all concentrated at one place when your C point is at either 61.8% or 78.6%. Okay, so these are very high probability, low risk type ratios for the C point when you are drawing your ABCD. Okay, and you will notice that if you have these numbers or these ratios, 78.6 or 61.8, you get less of a messy pattern. Pattern becomes nicer, pattern movement of price becomes less messy, not too much how do you call that, uncertain candles like making a bit of a mess in all this, like how you could see now. Okay, so hence the reason I would pick out 61.8, 78.6 and pay more attention if my ABCD pattern has got the C point landed on the dot of 61.8 or on the dot of 78.6. Okay, it's the same when I have a W-like pattern and I pull my X to A and I find my B to be there. Like here in this case, the B landed at the 38.2, not 61.8, not 78.6. So hence the reason you find that this is just an okay type pattern. So it does depend where the B point lands in a W and M-like pattern. I don't really bother whether it's a Gartley or not. I don't really measure and have all these numbers and label it as Gartley or crab or whatever. All I know is I like my pattern to be closer to the Gartley, meaning that I want the D to be shorter than the X. I want my C to be higher than this point, than the A point here, and it's closest to Gartley type pattern. But most importantly is for me to look at where the B is and where the C is, because that gives me, if it is on the dot of the ratios, it increases the probability and it reduces the risk, and it also how you call that, makes the pattern clearer for me to look at visually, and it's less messy as well. So it's all down to the ratios of where it actually lands. Okay, hope it's clear. So that's for the AUD/USD, guys, on the W-like pattern. As you can see, it's on the way down here, but it's probably got some more move there. If it does, then it might make a sort of flagpole pattern again, but once it reaches this area here, it may have more upside potential move. Okay, it all depends on once it reaches this area here, whether it's on a 1 hour or a daily. Once it does reach here, does it actually intend to give you a reversal signal with the candle as well? So once you get the reversal candle as well, and then it starts moving upwards, then that flagpole pattern might just be working or a successful pattern. Okay, so we want to from now on look into price as well, and start to see this as a flagpole pattern as well, potentially, but it needs to create that pattern down and go up first and break out of that down channel before it does anything else. Okay, but I do see more upward sort of move, might make this area a support from previous resistance area. So this is an area to watch for as well. Okay. All right, guys. AUD/USD that was. What else? Now we'll just very quickly go on to AUD/JPY. Yes. AUD/JPY. There we go. Okay, AUD/JPY. All right, hope that was clear for the AUD/USD. Okay, so now we are on AUD/JPY. Let's see. Okay, downward channel, as you can see, some space. It's similar to what we've talked about with the AUD/USD. So for here it's clearer on the AUD/JPY for the 1 hour chart, giving me some potential downward move within the channel of a flagpole pattern. Okay, so this flagpole pattern here, it's just playing around here, so we're just waiting for it to make that touchdown and then upwards and break out above. So that would be the similar in length of that to go upwards. So the AUD/JPY. Okay, but of course we have got strength of JPY to the upside, so we need to also look into the fundamental aspects of things. Need to look at AUD to the downside at the moment. Looks like it's stronger, so that pattern might not be seen as a flagpole pattern. So we zoom in a little bit and we look into it, and we see that there may be a flagpole pattern to the downside more than an upside, because you've got a bearish flagpole, a bearish pole, and then you've got a bit of an upside. So yes, it's probably giving you more room to the downside as of now compared to an upside move. So we pull and we treat that as an ABCD, and we move up here around there, and you can see that it's minimum 38.2. Okay, let's see. Yeah, so that's roughly how much it could be coming downwards to, but it needs to break that up first. Okay, break that up, come back a bit there, and then all the way down. Okay, all right, there you go. So that's what's going on with the AUD/JPY at the moment, but you want to look at the price as well. Price is at 77.38. Okay, you need to go under the 20 area to give you a bit more idea. Okay, clear, Zifo. That's brilliant. Thank you very much for that. We've not seen GBP/JPY yet. Let's look at GBP/JPY as well. GBP/JPY 4-hour chart. Okay, there we go. GBP/JPY. All right, so GBP/JPY, again, it's against the JPY, well, we have got more signals to the downside due to fundamentals as well. Got strength of the yen, okay, and weakness of the pound. Okay, so this is important for us to realize that prices are at 13509, so it would need to go under the 00. So 134.90 should be giving you more ideas to the downside. But again, look at the 4-hour chart here, GBP JPY, a little bit of a reversal type candle here. It couldn't go up more. The rejected going up a bit more. It's quite far away from all three lines, under all three lines. So we're looking at more chances to the downside as opposed to the upside. Okay, you want to look at very, very short term 5 minutes chart. You could see rejection at the look at this rejection candle here. Can you see that candle there with a higher wick bigger than the body? It rejected on the dot of the 200 moving average as well, and that is a sign of prices favoring the downward move as opposed to what do you call that, as opposed to the upside move. Okay, and this is a good sign. So what you can actually do when you look at prices like that and it hits there, you can then make that your ABCD type pattern as well, starting from there. But it's best to look this one as a correction here. Okay, so if I pull my Fibonacci all the way here to make that an ABCD like pattern, I just would like to look at where did that candle of rejection that has rejected a 200 moving average landed at. And this is a good sign. It landed at a 61.8, and that is really good, because then we might have a chance to look at it fall very nicely downwards. But we draw that pattern first. Okay, we draw that pattern from A to B. Okay, and we pull that one down to C to D potentially, but let's just remove this one here, get a better picture, better idea. Okay, there we go. So we've got, let's say, based on the 5-minute chart, okay, and I draw that AB equals CD already, right down there. Okay, so a potential downward move to this area here, which gives us the 133.995. So that's a lot of a potential. I mean, there's got some rejection here. You've got an upward candle trying to reach out. Might most probably find rejection again there. And if it rejected twice, then you've got sort of a double top kind of thing if it's a V type shape. But no, we'll pay more attention to this one here, and let's just do the ABCD first, all the way up here. Okay, now if at all we would like to enter, it's probably best for us to enter short under all the three lines when prices goes all under all three moving averages, correct? So let's convert this ABCD into a sort of geometric type pattern to find the vertex or the center point. And once we've got that center point, which is just here, that's at the 134 area. So we've got 134 to 133. Okay, it's still, it's quite okay to still trade that. But 134 short term, because you're trading a 5-minute chart, perhaps you want to scalp a little bit, you would need to wait for the prices to go under 134.70. Okay, so at 134.70 you can do a potential sell like order and take profit here. Okay, at 133.95 if you want to take that there. Still it's above the 80. Okay, so you can then, but you need to wait for that to happen, because we're looking at a potential sort of correction going on at the moment. Now in this little correction that you can see, again it's an ABCD, a very small ABCD or W pattern here. Okay, you take that AB equals CD. Okay, it's got a bit of space. It might challenge that area, but you know, not much power. But again, the candles are weakening at the moment. We do have a small W-like pattern here as well, okay, which signify a bearishness very soon, a turnaround very soon of prices. Okay, so we've got that inside that bigger ABCD-like pattern, got a W there making a bit of a correction. Okay, so this is where we can get a bigger picture of what's going on even on the 5-minute chart based on patterns. Okay, so in that ABCD you make that geometric, but this is the reason why, as you can see live now, because you drew that ABCD and the potential of a W-like pattern, prices is still trying its best. Perhaps it wants to go to that area there and then make that downward move, so bearishness would actually start at that area, at the D point area, but that's what we want to look at. Now it's just, sort of touch that 200, or maybe not touch, but very close, and then it's starting to give us some bearishness sign. So this is where we get a picture that that's a W pattern. It is trying to come down, and we would want to take that trade only after it crosses that vertex point for the GBP JPY 5 minutes chart. Okay, this is how I would trade on a short term, very short term, scalping like, but I would wait for prices to come under here to give me a higher probability type trade, as opposed to start selling here. I can do that too, but if I'm interested in increasing my risk, I can do that. Okay, but as you can see, prices is trying its very best come downwards. You go into the 1 minute chart. Okay, 1 minute chart is giving us that signal of a downward move momentum. Okay, very nice one actually, because you see that rejection candle is quite clear. Now this is what's happening here on the 1 minute chart. We go back to the 5 minute chart. This is indeed what is happening. So yes, I would wait. If for those who cannot wait, it's entirely up to you and your risk to take if you would like to enter that short and start taking it all the way downwards. Okay, so that's basically it. That's for the very, very short term. Okay, medium or neutral term on the 1 hour chart. You would need to zoom out, look at potential pattern wise. Still 1 hour and 4 hour is that big zap-like pattern. Okay, it is moving downwards, but even though if it's moved downwards, again, it would be within that zone, that range again. Okay, it played around that range here. Now prices is within this range now, because if at all it's on a 1 hour chart, we've got a huge A and then B and then C. This is still my C area here. Okay, if I take that and look at it as my C, then my A to B and my C is still at 61.8 area. Okay, I move that one there. Okay, right, and this is a zap-like pattern coming downwards. I still see it coming downwards in this area. If it doesn't break downwards more, it'll make that upward reach. Okay, but if it does make that outward reach, then it becomes a W pattern as well. Okay, and it's coming down, and it does still confirm that it would be coming down after that area there. Okay, so that is basically it, guys. I've got for you guys tonight. So if you guys got any other questions that you would like to ask me before we end it for that, we've looked through a couple of pairs. I hope that's been clear for you guys. And if you guys have got any other questions, if not tonight, you can always email me straight to kenny@allbacks.com. Okay, any other questions, guys? Everything been clear? Okay. All right. So, okay, so no more questions. I would like to end or wrap up this session tonight, and would like to say a big thank you to you guys, and do join me again on Wednesday, and we'll definitely come back, and I mean, with any other questions, do come back to me. So thank you very much, guys. I would like to say good night to you guys, and see you again. Day after tomorrow. We've got another session for Wednesday's session. Okay, thank you. Bye-bye. Yes.